Hello Maverick traders and welcome to today's currency recap. It is the aftermath of Fed Day and the stock market has continued to sell off. Bank stocks especially have continued to fall. Gold broke out and today we had the ECB following closely in the footsteps of the Fed with its own 25 basis point quote-unquote dovish hike. Okay, taking a look at the S&P 500, we are just bashing our heads against this neckline that I've been calling out for weeks now. And until we get a decisive break one direction or the next, I think it's very difficult to firmly pick a side on this market. The current parameters right now are, well, we'd have to break back above that neckline if we want to turn bullish, and we have to break below the 50-period moving average in orange if we want to turn significantly bearish. Right now, I'd say it's a coin flip as far as the price action is concerned. Here's a price chart of a regional bank ETF. This is a monthly time frame chart, just so you can see the magnitude of these moves. Given what's happening, and it just seems like more regional banks are just coming into trouble every single day now. The latest victim is PacWest out of California. I wouldn't be surprised to see this ETF crack 2838. But it's important to keep an eye on this because this is what the market's paying attention to right now. So if you want a real-time kind of view into what the market thinks is most important, it's the banking sector. So this ETF and XLF, the broader financial sector ETF, is a great one to keep an eye on as well. Okay, now here's a chart of the crypto basket we follow. This is also kind of in no man's land. If we break significantly below, let's say 29,000 in this basket, it'll start looking an awful lot like a head and shoulders top. On the other hand, if we break back above 3240, then I'd say this is more akin to a high base that's getting ready to break out. It's a bit of a sloppy high base, however, so as an Elliotician, I would say it kind of looks like a bullish triangle, bullish continuation pattern if we break back above to the upside. All right, no surprise here, the market gets a zero. I mean, we're below the 20, we're above the 50 MA, and the slope is flat. And if you thought the fireworks were done now, well, tomorrow we're gonna get more as we have NFP coming out of the US and we've got Canadian employment reports coming out. So that's early tomorrow morning, so keep an eye on that for sure, especially if you're holding any trades going into that time window. Okay, taking a look at currency analysis. Crypto, a little bit down on the day, but considering the performance in stocks and considering the performance in commodities like oil, I'd say crypto's hanging in there just fine on a relative basis, at least for now. On the fiat currency side, the Kiwi dollar was the clear outperformer, followed by the yen and the Canadian dollar, while the euro and the Swiss franc were the biggest losers on the day. Now, in terms of velocity scores, I don't mind having the Kiwi at a +1 and the yen at a +2, but I really wouldn't pay too much attention to the Canadian dollar and US dollar scores because this could all shift tomorrow given the volatility events that we're expecting tomorrow morning with those employment reports. Okay, let's take a look at some possible trades as we head on over to TradingView. We're going to kick it off with the New Zealand dollar. Last week I said the Kiwi has to put up or shut up, and boy did it put up. We've now broken out of this wedge. Very simple. I like to buy the Kiwi on dips unless we get a major trend reversal to the downside. The Aussie dollar is stuck in no man's land. Like I said, for a bullish Aussie, I really need to see a break through this long-standing downtrend line that I have drawn on the chart in blue. Canadian dollar, also in no man's land. We're in this range. That could change tomorrow. All ranges will end sooner or later. I'm not saying that for sure it's going to end tomorrow, but it's definitely something to keep an eye on. The pound, like I said, for several weeks now, we've broken out of this triangle and we now have a very clear support line in place that's so far keeping the rally intact. I really like buying the pound against this trend line. If we break through the trend line decisively, however, then I say we're going to get a more significant pullback, maybe back to where we were trading in mid-March. Next is the euro, coming into minor support here, which is this broken resistance that we busted through, which were the highs for May 2021. So I think that this move down in the euro looks pretty fierce. I wouldn't be shocked if we were to take that support out to the downside. But we're getting quite close to it. So this is the basket. If you're considering shorting the euro on any currency pair, just make sure you're not shorting the euro directly into an obvious, support level. With the Swiss franc, kind of trading in a range since, last Tuesday or Wednesday. I'd say the Swissy is best left alone until we break out of this range one way or the other. The dollar, we broke out of this wedge to the upside, and then we faltered and pulled back sharply. Tomorrow's news event, I think, is going to give us the clue as to whether or not the dollar is going to stage a bull pullback here and go roaring higher, or if we're just going to collapse lower and retest these lows from February 2023. Now, finally, we've got the yen, which has followed the script really nicely so far. I said last week, I think it's likely we break through the support level, find support, and then trade back above it. It's exactly what's happened. The next objective for yen bulls will be the high from Wednesday, April 23rd in this basket. Yen bears will look for capitulation and for a decisive break and close back below this green support level in the basket. And that's what I've got for potential trades. So in conclusion, volatility is relatively high right now. Pay special attention to proper position sizing. And my most important tip, given the current market conditions and environment, do not place your trades based off of news or fundamentals. That doesn't mean you can't trade news events like yesterday's Fed meeting or this morning's ECB. It just means that you should not take a position based on the number that comes out of those news reports. What you really want to pay attention to is the price action first and foremost. All right, traders, that's it from me. Good luck trading tomorrow if you are trading those news events, and I'll see you next week.